Hey everyone, on one side while FIs are consistently selling stake from Indian market, there is one specific FI that is consistently increasing stake in top Indian companies. It's Goldman Sachs, one of world's largest investment banking firm that manages more than $2.5 trillion of AUM. They have an India equity portfolio where they are consistently buying a few interesting Indian companies. And that's where in this video, I want to highlight those companies. Some of the companies we have already discussed in detail on our YouTube channel and some are new. But before we proceed, please note that this video is only for educational purpose, it's not a buy or sell call. By the way, Goldman is one FI that I closely track along with a few more names that I discussed in one of my recent video and how you can also track the latest changes in their portfolio. So you can watch that video. Alright, let's get started with this video. Alright, let's first start with the companies that Goldman Sachs is adding that we have already discussed on our YouTube platform. So first company is Prell. We discussed it last year on 16th October when it was trading around 330 rupee. Today it is at levels around 510, so generated around 55% return. Prell is mainly into the business of driver information and connected vehicle solution. So it provides those ADAS that we see on the car and the motorbikes. You can see here e-cockpit, TFT clusters and instrumental clusters. Apart from that, it is also into your battery management system. And then second division is actuation, control and fluid management system that include various pumps. Now, if you look at the shareholding pattern of Prell, in FI section, it is showing here Goldman Sachs that invested 2.2% stake in December 23. That got increased to 3.67 and that has got increased to 3.83. In fact, your FIs have consistently increased stake in Prell and even your DIs have increased the stake big time. Your public holding has reduced significantly and one of the reasons is Minda Corporation that held a significant share sold its stake. So net it is being added by strong hands of FIs and DIs. If you look at other details, it's a small cap company with market cap of around 6,200 crore trading at a P of around 40. It's got very high ROCE and a very good ROE, almost a virtually debt-free company. Generating a good amount of CFO to EBITDA, so generating a very good cash flow. And all in all, growth is also very good. If you look at the top line has grown at a very good rate, bottom line has grown at a very good rate. So net very good performance from the company. If you look at the share price movement in last 3 years, it's been a one-way rally. If you look at 5 years, again a one-way rally. So there was a phase when it was struggling till 2020, but since then, from lows of 34, it is now at 510. So huge growth we have seen. Yet the thing is, management has given very good guidance for the next couple of years, and that is the reason Prell is consistently doing well and being added by top players. Now, next company in the list is CMS Infosystems. I remember covering it recently on 30th April when it was at levels around 415. Today it is at levels around 555. So generated around 34% return in last few months. So CMS Infosystems is India's leading business service platform for BFSI, that is banking and financial service and retail segment. It has got two business vertical. Logistics solution that include your ATM cash management, retail cash management, cash in transit, and second, which is the most interesting business, which is also a high margin business, is your managed service and tech solution that include your software and artificial intelligence, IoT, and then banking automation, payment cards, ATM as a service, which is growing at a faster rate. Now, if you look at the shareholding pattern of CMS Infosystems, FI stake has gone up in the company big time, and if you look at it, promoter stake has become zero. So I've discussed it in detail. It had a PE firm as promoter that sold stake, but the important aspect is that it has been absorbed by FIs and DIs, and if you look at the shareholding, it has got all top FIs likes of Small Cap World, Abu Dhabi, Government Pension Fund, Nomura, and Goldman Sachs. You can see here that has increased stake from 1% all the way to 1.34, 2.12, 2.3, 2.48 and now 2.59. So consistent buying by Goldman in last many quarters. Apart from that, we've got very interesting funds in its shareholding. So its market cap is around 9,000 crore as of today. P ratio is around 25.5, very high ROCE, very good ROE as well, a debt-free company completely, generating a good cash flow of 440 crore and a good CFO to EBITDA as well. Valuation wise, also decent at PE of 25, EV to EBITDA of 13.6, price to sale of 3.8. If you look at the share price in last 3 years, there has been a decent growth, but then recently from the lows of around 400, there's a very fast growth in the company, mainly after the exit of the PE firm and when the strong hands have invested in the company. Next stock in the list is Gokaldas Export, another company that we have discussed multiple times on the platform. So first time I covered it when on 30th May 23, when it was at levels around 440. Current market price is around 900 rupee. So stock has doubled in around 1 year. So basically it is one of the leading garment manufacturer in India, and its key market area is the US. Now, some of the key facts is got 4 decades of manufacturing experience. It's got more than 30 plus state-of-art manufacturing facility, produce 87 million pieces of annual production, and cater to more than 50 brands in more than 50 countries. So it has been a fantastic turnaround story, as the title suggests, when Gokaldas got taken over by a new leadership, and that's when stock has generated humongous return for the investor as well. So if you look at the shareholding pattern, again the same story, promoter stake has reduced significantly, which was a PE firm, so it has booked profit, but then it has been consistently absorbed by FIs and DIs. Look at the holding, FI's stake is up from 4% all the way to 26.5, and DI's stake is up from 10 all the way to 31.9, and your public holding has reduced from 52% all the way to 32%. So excellent buying of strong hand and selling of weak hand. Within that, if you look at Goldman Sachs, look at this. It was at 4.67, then got increased to 4.9, then 5.3, 5.2, and now 5.7%. So Gokaldas Export is currently a small cap company with a market cap of around 6,400 crore. P ratio is showing on higher side. It's mainly because its earning growth has reduced, but eventually when the earning would increase, P should fall down. ROE and ROC are also on the lower side as of today, but once the textile sector would recover, because it has been last 2 years the textile sector has underperformed, but there are signs of recovery, and that's where eventually this ratio should also improve. Debt to equity of the company is 0.62. So valuation comfort is there, although cash from operation was negative last year, but before that it has always consistently generated cash. So currently company is also in the phase of doing a lot of investment. And if you look at the growth, look at this. From the levels of 930 crore in March 17, Gokaldas Export has grown consistently to current levels of around 2,800 crore. And at one point in time, it was in losses, and from there, look at the recovery. And that is the reason its investors have also been rewarded. If you look at the share price journey, from the lows of 30, it has jumped to levels of 900. And yet, the P ratio is not crazy. Again, it is showing on the higher side. Like I said, the reason is because the growth has slowed down, the earning has reduced, but eventually this earning would improve and P should fall down. And the market cap is 6,800 crore, today trading at levels of 900. Next stock in the list is Landmark Car. So I remember covering Landmark Car when it was at levels around 830, around 28th January this year in the beginning, and today it is at 540. So there is around 35% correction in the share price. So Landmark is basically a retailer of luxury cars. Okay, it has got a retail chain that include brands like Mercedes, then it's got Hyundai, Jeep, Volkswagen, Renault, BYD, MG, then Mahindra, Kia, and your Ashok Leyland. And you can also see the outlet count. So there are 21 outlet count for Mercedes. This is in progress. So 2 would be soon launched. Then 25 outlet for Honda, likewise 19 for Jeep, 25 for Volkswagen, and likewise. It was founded in 1998. It has got around 5 lakh customers, a presence in 30 cities, and it's a professionally managed premium and luxury auto retailer. So it's a good proxy for the rise of affluent Indians. And if you look at the shareholding pattern of Landmark Cars, and within FI section, Goldman has increased stake from 2.4 to 3.1, then 3.3, 3.5, 3.9, and now 4.1%. So consistent buying. Even your DIs have consistently added stake from 7.6% to 16.6%. So in spite of 35% fall in the share price, the DIs and FIs are adding stake in the company. That shows the confidence. It's a very small cap company, market cap of around 2,200 crore. P ratio is at 42 as of today. The ROE and ROC are not looking very good as of today. Then debt to equity is also slightly on the higher side at 1.16. Cash from operations still positive, but price to sale, look at this, its price to sale is 0.66. So currently company is in the phase of investment, and it has got 3,400 crore of trailing 12-month sale, against which the market cap is just 2,200 crore. Eventually, when these stores would mature, would generate enough cash flow and profit, and eventually the P ratio would fall. So I think that with 35% correction and the kind of confidence FIs and DIs are showing, it is looking quite promising, although the technical trends suggest a very weak performance, but worth keeping a close eye. Next stock in the list is your Ganesha Ecosphere. This is one of the latest stock that we have covered on 16th of August. It is interestingly into your recycling sector. We have discussed it in a few videos as well, but the recent video that I did was a complete detailed analysis of its business model. So it's into your recycling of plastic bottles and converting them into products that find usage in textile as well as your packaging sector. So plastic bottles are recycled into your new bottles, as well as the products are used into your textile to manufacture clothes and a lot of other stuff. It has got more than 3 decades of experience. It basically mobilizes 350 tons of PET bottle waste every single day. And Ganesha Ecosphere has recycled more than 7.5 billion PET bottles on an annual basis. So you can imagine the kind of scale it operates in. You can see there are more than 500 product variants of the company. It has got more than 400 customers, more than 250 supplier network. It's got 6 state-of-art manufacturing facility, 2,800 employees. Now, if you look at the shareholding pattern of Ganesha Ecosphere, DIS section, Goldman Sachs invested in the company in March 24 and purchased 2.7% stake. That has been increased to 2.8%. Apart from this, even your DIs are consistently adding stake in the company. And even your FIs have increased stake. Although promoter holding is slightly reduced, but net public holding has reduced all the way from 41.9% to 31.9%. So that's a very positive sign. Next, if you look at the market cap, it is at around 4,400 crore today, and P ratio is showing very high at 75. But the reason is because in last few quarters, in trailing 12 month, it's some of the quarters were weak, and because of that, it's due to low earning, its P has expanded. Eventually, once we cross these quarters, your earnings would expand and P would fall, because P ratio, always remember that it only consider last 4 quarters, so trailing 12 month, which is last 4 quarter, and that is the reason, because of lower earning in couple of quarters in the past, its P has increased. But apart from that, price to sale is just 3.7 and EV to EBITDA is 26, which is decent. And the best part is, for FY25, management has guided for 40% top line growth, and margins are expected to improve from your 12% in March 24 all the way to 16%. So margins are also going to expand. If you look at the share price journey in last 3 years, it has been on an upward trend. In fact, since inception, the share price has been consistently going up because of the business model and the potential in the recycling industry. Next, we have got in the list is Craftman Automation. I remember covering it on 9th November when it was at levels of 3,200. Today it's at 5,300. So generated around 65% return. Craftman Automation is one of the leading precision component manufacturer in India that find usage across your auto industry as well as a lot of industrial application. If you look at its shareholding pattern, your Goldman Sachs has consistently increased stake in the company. Look at this. Since last 5 quarters, Goldman is consistently adding it, and your FIs are also overall adding stake in the company. Even DIs are adding stake in the company, and public holding has reduced from 22% all the way to 14%. Currently, it has got a market cap of around 13,000 crore. P ratio is 45. ROC is 20%. ROE also, that's a good one. Your debt to equity is slightly on the higher side at 1. Then EV to EBITDA is just 16. Price to sale is 2.85. So valuations are reasonable. Company is generating good cash from operation. Look at this, 513 crore of cash and consistent cash generator. But in last 1 year, there's not much growth in share price. Having said this, it's a mid-cap, small to mid-cap company at 13,000 crore market cap and looking quite promising. Then next we have got in the list is IdeaForge. I remember covering the business model of IdeaForge in detail at the time of its IPO. And it has been a roller coaster journey. Its IPO was at 672 and from there it doubled on the listing day, and since then it has corrected. all the way to back to square one with no return since June 23. Now, please note that Idea Forge is India's leading drone manufacturer. It has got a very strong promoter pedigree with IIT Bombay alumni. If you look at Goldman Sachs, it entered in December 23 at 1.3%, got increased to 1.67 and now 1.43. Now, the problem with Idea Forge is that it has been extremely volatile, and that is the reason market doesn't like it. Look at this, margins are extremely volatile, profits are also extremely volatile, and that is the reason market has punished it from the highs of 1300. It has fallen all the way to 688. Having said this, I think Idea Forge has got a lot of potential for long term, so worth keeping a close eye, and the fact that Goldman is adding, certainly they have found potential in the company. Now, before we proceed further, if you are a long-term investor and looking for guidance, I have got a weekly series where I share one exclusive video, and basically I spend nearly 8-10 hours a day doing the research and trying to identify opportunities in the market. Now, in addition to this, I also share these talks where I am convinced and I am investing my money. And I also share the reason behind that. But again, that is not a buy or sell call. The idea is to share my conviction and guide you in right direction so that you can do your further research to invest your money. You can get this detail on my website, or you can also get the detail on the join button of this YouTube channel. In addition to all this, I also track more than 200 quarterly results, and that's where we try to identify opportunities so you can access this Excel tracker as well. Now, moving on, next company where Goldman is adding is Ethos. It's a luxury watch retailer, okay? And if you look at the this slide, this gives you a good idea. So the average selling price of their watch is 2.2 lakh rupees, and it is a great proxy for your growth in your affluent Indians, right? So as the number of HNIs would increase in India, the sale for company is expected to increase, right? And if you look at the performance of the company, Ethos, let's look at the shareholding first. So within that, if you look at Goldman Sachs, it entered in December at 1.27% stake, and that has got increased to 1.3%. Even your entire FIs have increased stake in the company, and even your DIs have increased stake in the company. Although promoter holding has reduced, but net majority of it has been absorbed by FIs and DIs. So Ethos current market cap is 8,200 crore, P is certainly on the high side at 94, but price to sale is 7.9, EV to EBITDA is 43. ROC is not that great, but debt to equity is well under control. If you look at the growth, in last 3 years, its top line has grown at 37% CAGR, and its bottom line has grown at 160% CAGR. 5-year compounding is 44%. So company is certainly growing at a very fast rate, and that is the reason it has rewarded the investor with 3-year growth from 746 all the way to 3,300, and in last 1 year it has grown from 1,600 all the way to 3,300. Then next company in the list is your Ask Auto. This is a recent IPO when company IPO'd in November 23. If you look at the shareholding pattern, Goldman Sachs has entered during the IPO with 1.49%, that got increased to 1.66 and now 1.73. And look at this, promoter hold 85% stake, and the next 10% stake are with FIs and DIs. Just 5.8% is with public. Company has got a market cap of 8,200 crore, P ratio is 42, very good ROE and ROCE, debt to equity is also well under control. Company has got very good cash flow from operation, a very high CFO to EBITDA, and valuations are also looking decent. And if you look at the share price, its IPO, since IPO it was at around 310, fell down to lows of around 243, and today it is at 417. So again, what it do? It is basically into your braking system for two-wheeler. It's a leading company in Indian two-wheeler braking system with 50% market share in advanced braking system of India. Company has more than 30 years of experience. It exports to 12 countries and it's got a strong in-house R&D engineering and design center. It caters to both EV and non-EV segment, and you can see the business breakup as well. Now moving on, next company in the list is Tattva Chintan. It is your specialty chemical manufacturer, where its product include your phase transfer catalyst, structured directing agent, electrolyte salt, pharma and agrochemical intermediates. Now if you look at its shareholding pattern, FI's stake, Goldman has consistently increased stake in last 4 quarter, and even your public, so DI's holding has reduced, but net your Goldman Sachs is looking quite interested in the company. Even the share price has been consistently falling. Currently, it's a market cap of 2,200 crore. P ratio is on the higher side because the earning has reduced. Company is debt free, but quite interesting that Goldman is consistently adding stake in the company. Next in the list is TD Power System. It is into the manufacturing of generators. So it is a leading manufacturer of AC generator. Since inception, manufactured 6,419 generators, where it has exported to 109 countries. Its product find usage in your turbines like steam, gas, hydro, and wind. So it says we deliver best-in-class generators for the world. And if you look at the share price and shareholding pattern within FI section, Goldman invested in the company in September at 1.65, got increased to 2.3, then your 2.7, and now 2.84. So consistent buying. Even your FI's stake has increased consistently, DI's stake has increased consistently. Although promoter holding has reduced, but majority of it is absorbed by FIs and DIs. In fact, your public holding has reduced in the company. So currently, company has a market cap of 6,500 crore, P is 51, very good ROE and ROCE, debt to equity, so company is completely debt free, generating decent cash from operation with CFO to EBITDA of 44.9, and valuations are slightly on the higher side, but company has been growing at a decent rate with 3-year top line growth of 19% and bottom line growth of 44%, and the fact that there's a lot of tailwind in the power sector of India, and that's where it's looking quite interesting. Next stock is Amber Enterprise. It's a leading electronics manufacturer in India. It has got a wide range of portfolio. One of the portfolio is your consumer durable that include your target segment, which is your AC, as well as non-AC that include your refrigerator, washing machine, microwave, water purifier, auto, energy meter, and so on. The next segment of the company is electronics product, where company does the backward manufacturing and produce the printed circuit board that find application across your consumer durable, auto, smartwatch, IT, telecom, energy, defense, aerospace. Then it is also into your railway subsystem and mobility that find usage across the various departments of railway, defense, as well as data center. And this is the breakup where 75% business of the company is from consumer durable, 18% from electronics, and remaining from your railway subsystem and mobility. So this is for FY24. Now, if you look at Amber shareholding pattern, FI section, your Goldman Sachs invested in December with 1.3%, then increased it to 1.5 and then 1.58. It also held it in various other section, but then now it has moved it to India equity, where it has consistently increased stake. Now, if you look at Amber Enterprise market cap, it's a 14,000 crore market cap. P is looking at higher side, but as compared to other electronics company, it has got one of the best price to sale at 1.88. EV to EBITDA is also interesting at 24. The reason why P is on higher side is because of 2 weak quarters. Look at this. So out of 4 quarter which PE ratio consider, so 4 earnings, it was actually negative for 2 earning, and that is the reason P is high. But once we move on to the next 2 quarter, its P ratio would fall down because those negative earning quarters would be removed from this, and that's where you can't just blindly look at P ratio. Okay, and if you look at the share price of the company, in 3 years, it's been a roller coaster journey. In 5 years, there was an excellent growth till 22, then fell down, and since then it has grown very well. Now, if you look at the growth of the company, in 3 years, its top line has grown at 30%, and its bottom line has compounded at 16%. Now, this is a very interesting business. I've been reading about Amber Enterprise, and they're doing a lot of innovation and investing in capability building, and management is also looking quite promising. And valuation, like I said, one of the most attractively priced company in your electronic space. Then next stock that Goldman Sachs is adding is Asian Chemical. If we just go to investor section, FIIs, Goldman has invested at 1.02% in September 23, increased to 1.6, 1.8, 2.25, consistent buying. Just one thing I want to mention with this, that there's no guarantee that if Goldman is consistently adding stake, it would continue to do so. There can be a case where it reduced stake. So please don't blindly buy in any company just because Goldman Sachs is consistently adding. The idea behind this exercise is to identify potential opportunity. So company has got a market cap of 9,200 crore, P ratio is 33, very good profitability, debt to equity is also negligible. Company is generating good cash from operation. Your earning growth has been negative in last 1 year because of the pressure in the chemical industry, but Goldman is adding it. Next, we have got Jupiter Hospital. Company had its IPO last year, and if you look at its share price, so Goldman Sachs has entered in the company in December with 1.3% stake, got increased to 1.5 and now 1.51. It has a market cap of 8,900 crore, P is 55, very good ROE and ROCE, debt-free company, decent CFO to EBITDA, and 25% top line growth in 3 years and 109% growth in bottom line. So company has been growing at a very fast rate. Next, we have got Kintech. It is a depository. There are two key depositories in India, CDSL and second is Kintech. And if you look at the company, its shareholding pattern, Goldman Sachs has consistently increased stake in the company in last 6 quarters. And if you look at market cap, 17,000 crore, P ratio is 63, slightly on the higher side, but excellent profitability, just like CDSL, debt-free company. Company has got very good cash generation from operation. So CFO to EBITDA is also excellent, and company has been growing at a very fast rate. Look at this, 5-year 39% compounding of sales and 94% compounding of profit. Look at this, excellent growth in bottom line as well. Then next stock that Goldman is adding is Mahindra Lifespace. So it is engaged in the business of development of real estate, residential facility, commercial complexes. If you look at the shareholding pattern, Goldman earlier had higher stake in the company that got reduced. But look at this, in last few quarters, it has consistently increased stake in the company. In fact, even Kotak fund has increased stake, and even your DIs have increased stake in the company. So currently it has got a market cap of 9,000 crore, PE is 78, price to sale is also on the higher side. So majorly because company is into your growth phase where it is launching a lot of new projects, and debt to equity is 0.47. Wealth creation, if you look at it, there's not much wealth creation in last 1 year. 3 year is a decent wealth creation. Growth wise, there's not much growth, but recently the numbers are looking better. Having said this, it is more of investing in the future, and that's where I think your Goldman Sachs is betting on, where Mahindra can come up with more projects and become profitable, and probably playing this real estate theme upcycle in India. The next company is Cartrade. It's a leading online portal where you can buy and sell cars, and it's got a brand called Car Wale, and there are other few brands as well that also include Bike Wale, then Shriram Auto Mall. And if you look at your FI section, there are no promoter for the company, and within FIs it includes Goldman Sachs, where it is consistently adding stake since last 3-4 quarters. Company has got a market cap of 4,000 crore, P is 52. Its profitability are not high at the moment, but then it's into your platform business, so eventually it is expected to do well. Share price, it's been a roller coaster journey. Company had its IPO in 21 at a very high level, fell down badly, so it was a big crash. But since then, there's a very good improvement in the share price, and even your DIs have increased stake in the company from 4.9 to 12.9%. Next stock in the list is SJS. So it is into your manufacturing of aesthetics for your car and your bike as well. Driven by premiumization, new age aesthetic products, and you can see various products that are used into the car, and its product also find usage in your two-wheeler sector. If you look at SJS shareholding pattern, within that, Goldman has invested long back, and recently if you look at it, it has consistently increased stake in the company, and your promoter holding has reduced, but net FIs have increased stake big time, your DIs have increased stake big time, and public holding has actually reduced. Right, so quite interesting. Market cap is around 3,000 crore, P ratio is 32, very good ROE and ROC. Debt to equity is also well under control. Company has got a very good CFO to EBITDA, so generating very good cash from operation. And last 1 year, if you look at share price, from 639 it has jumped to 987, so not much appreciation, but this investment from Goldman is looking quite interesting. Then next stock in the list is Spandana Spurti. It is engaged in the business of microfinance sector, and if you look at FIs, Within that, Goldman has increased stake from 1.85 all the way to 2.4, 2.6. Although it reduced stake in March, but again increased to 3.49%. Now, please note that the entire microfinance sector is going through a tough phase, including Spandana Spurti, and look at this, because of which the share price has fallen from 1200 all the way to 588. Now, if you look at the price to book, it is 1.18, P is 10, market cap is 4,200 crores, so probably worth studying the company, since Goldman Sachs is considered investing in the company. Final name in the list is Zensar Technology. It is an IT company, and within that, Goldman has been consistently adding stakes since last 10-12 quarters. Look at this, 1.1 all the way to 1.2, 1.5, 1.6, 1.7. And currently it's got a market cap of 18,000 crore, P ratio is 27, very good ROE and ROCE, virtually a debt-free company. Again, very good cash generation from EBITDA. And if you look at the growth, although the growth in top line is not that great, but bottom line it has grown very well. From look at this, consistent growth in bottom line, and growth in 3 years is 25% at a CAGR rate. Share price movement, if you look at it, 5 years, there was a phase when share fell down significantly, but since the December 22 period, there's a consistent one-way rally, and currently trading at a P ratio of 27. So this is the summarized version. If you look at it, it include names like Precall, CMS Info, Gokaldas, Landmark, your Ganesha Ecosphere, Craftman Auto, Idea Forge, Ethos, Tatva Chintan, TD Power, Ask Auto, Amber Enterprise, Asian Chemical, Jupiter Hospital, Kintech, Mahindra Lifespace, Cartrade, SJS, Spandana Spurti, Zensar Technology. Like I said, some of the stocks we have already discussed in detail, while some we have not done. Now let me know in the comment section which stocks you hold in your portfolio, and if you want me to discuss any stock in detail which I have not covered, just tell me in the comment section. This is it for this video. I'll see you next video. Till then, take care.